Two Bowls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
DraftKings Sportsbook, an official sports betting partner of the NFL, is officially live. Now you can legally bet on all your favorite sports anytime and anywhere, right here in Ohio with DraftKings. For a limited time, new customers who sign up with code DEFEND and bet $5 or more will receive $200 in bonus bets instantly. DraftKings has the best features, including same-game parlays, player props, and more, with fast and easy payouts right at your fingertips. Download the DraftKings Sportsbook app now. New customers can use promo code DEFEND to get $200 in bonus bets instantly when you place a $5 bet on anything. Only at DraftKings Sportsbook with code DEFEND. Gambling problem? Call 1-800-GAMBLER. 21 and over and physically present in Ohio. Valid one offer per first-time depositors who have not already redeemed $200 in free bets via pre-launch offer. Minimum $5 deposit and wager. $200 issued as bonus bets. Eligibility restrictions apply. See dkng.co/OH for terms.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face. Hello, everybody, and welcome to the China Shop. I'm fumbling my way through this introduction as your host, Kyle, and joining me again this week, we've got Eric from ES Invests. Before we start talking about the news, though, I'd just like to take a quick minute to say thanks to our sponsors and friends over at Manscaped, Trade Pro Academy, and Orderflow Labs. Manscaped is the best in below-the-waist grooming with precision-engineered tools for your family jewels, and with Manscaped getting into the world of beard care, now is the perfect time to take advantage of our exclusive offer of 20% off and free worldwide shipping using promo code 2bulls at manscaped.com. As always, that is the number 2. When it comes to institutional quality trading education, look no further than tradeproacademy.com. Our free Discord server, you'll also find instructions there to take advantage of our discount with them as well. And for all you degens who enjoy trading futures, you definitely want to check out the custom tools and studies over at Orderflow Labs. And obviously, you want to stay up to date with Eric's new McLaren purchase, so you should be following him at ES Invests on Twitter and YouTube to make sure you stay up to date with that. And lastly, be sure to reach out to us with your suggestions, corrections, questions for future guests, or just shoot the shit, tell us stories. Maybe you lost, maybe you won. I don't know. Whatever. We're here for you. You can do that via email at 2bulls@financialineptitude.com, or you can join that free Discord server I've mentioned multiple times, where a bunch of amazing people gather to share our struggles and lesson learned with other like-minded market aficionados. Be sure to put all those links in the episode description as well. All right. Now that all that crap's out of the way, what you got, Eric? How you doing today?
Stellar.
Oh boy, it's gonna be another one of those one-word days, huh?
Well, I did. I had a bunch of trades today. Nothing too entertaining. I did take a small loss day trading in the rut. It bit me in the old gonads.
It sounds similar. I think I had a similar experience today.
Yeah. I did reestablish. So I had some volatility trades in Goldman Sachs that came in nicely. And then I had some core trades in IWM that are moving just fine. But in the Russell, admittedly, it was a little bit of a stretch just because the volatility or variance risk premium, as I typically refer to it as, it wasn't as robust as I typically like it to be. But it's been generally range bound otherwise. So I was like, I'll put on a small trade. And then it was working okay. It started with just short puts. But then obviously the market was trending down. It started getting a foothold around 1860. So then that's where I entered with those short puts. Then I started adding some short calls against it. And then those started to get challenged. So long story short, I essentially just traded both sides until I could get out. It was a $2,800 loss. So for the size of the trade, that was close to a break even. But still, enough of a loss that it's worth mentioning, just because I think it is important for people to talk about losing trades because they fucking happen. And that was one of them.
So you were able to work your way closer to break even, or was there any point where you thought about just cutting it
No,
and just
no,
walking away,
it's
or no?
no. The trade's small enough that I don't really get to those points. What I do is
Mm,
they typically start with a defined structure. So it'll either be naked short puts or it'll be a short strangle, short straddle, something, right?
hmm.
Just a typical option structure. And then as it starts to move underneath me, that I turn them into whatchamacallits and thingamajigs. And what I mean by that is I'm not even, I mean, I couldn't care less what the structure is in terms of like trying to name it. I'm just adding risk in different points to
Hmm.
modify the risk profile. So at one point it was like a straddle with an additional short calls against it. Then it was like a double strangle. Like it just morphs throughout the life cycle of the trade. But I mean, at one point it was definitely down pretty big. And I'm fortunate enough in the way that I size these trades, I do use size to
Hmm.
get me out of the danger zone. So what I mean by that is I just begin piling on risk that allows me to change dramatically the risk reward profile. And then I'm using time and the contraction of volatility. The downside today that just made it a little bit more arduous was as the Russell was contracting, volatility was expanding.
Right.
So not only was I being directionally challenged, but I was also being challenged just in terms of the volatility of the position, which I would make that as time decays. But the problem is I need to wait for time decay. So as that risk is
Right.
shifting around, I'm just having to move a bunch of shit essentially nonstop. So it's one of the reasons why I don't day trade too much, just because it can turn into that. Now, I mean, the last 2 weeks, it's been an extremely productive trade. I'm up overall handsomely on the strategy. So today was obviously just a small step back.
Hmm.
But, like I said, I just think it's so important for people to at least fucking talk about losing trades once in a while, because we're really, your program's one of the ones that I feel like people are a little more open and honest about that stuff, which is important. But most other places, man, I look at my performance against like the performances I see on a place like Twitter, and I'm thinking I am a total fuck up.
Yeah. Oh yeah.
And I know that not to be true, but it makes you feel that way because, yeah, apparently everybody's a fucking genius.
It's crazy. There's like what, a 10% success rate if you're being generous in the world of trading, and it seems like everybody's on Twitter and vocal like that full 10%. Like where's the rest? Like, oh, yeah, something doesn't add up.
Exactly.
Yeah, I had a bit of a challenging day too. I guess maybe we can, like, definitely something that I posted to hopefully get people to learn from some of the mistakes and trials that I had today, which was more just about mental discipline and patience. I was very happy that I was able to stop myself in the moment and not make it spiral worse, like we talked about the first time. The checks that I put in place worked. That's a positive for me. But one of the big things I think I came up with is that I got too much discretion in my trading. And so I spent pretty much the entire day testing or back testing a new strategy that would rely less on discretion and more on defined structure.
It's dangerous.
And you'd be happier to know too that that's something with a longer time frame as well.
Yeah, I think integrating different time frames for you. Obviously, I talked about that before.
Hmm.
So I'm definitely glad to see that. The thing about additional structure, the reason why I say that that's dangerous is it's just such a delicate balance. And this is
Yeah,
less for you,
yeah,
more just for the general people listening, because it goes to the point where, okay, if we structure things enough, why wouldn't we just automate it? And if we can
right.
automate a successful strategy, why wouldn't everybody just do that? And there's a
Yep.
reason why that doesn't happen. So,
Yeah, there's been a huge discussion in our group about backtesting and the importance of it. And you really start to see the benefits of it because you start to pick up on those nuances as you do the backtesting. Like, oh, okay, this adds strength to my conviction. This is a condition that maybe I don't want to take it. Like the retest doesn't happen within a set period of time, or it hits one of my targets before I had a chance to enter it. Like, okay, scratch that. We're not taking that trade anymore. Things like that.
right. Yeah. And I think that's spot on, man, because
Hmm.
the other thing I think about is I think we've talked about this before, but the real benefit from something like back testing, it really isn't even the output of the back test. The only
Hmm.
thing that an output of a back test is going to give you is like the really shitty things to avoid.
Right.
So, like that. fine, no problem. I think there's value in that, but I think
Mhm.
the real benefit from back testing is the mental exercise, and that is super important because I see a lot of people. It's good to see an increasing movement of people talking about, like, creating a trading plan or something like that, whereas a lot of the time it that wasn't even part of the conversation.
Right.
So it's really good to see that coming into the conversation, but as people do, they try to do it lazily, and they don't
Mhm.
realize, as they're cobbling this random shit that they come across from all these different places together into whatever they decide to call a trading plan, and then they have a hard time following it. Well, there's a pretty clearly defined reason for that, because there's no efficacy behind it, because you haven't even done that very first rudimentary step like we talked about, which is back testing.
Mhm. Mhm. Well, before we spend the whole 30 minutes that we have chatting about how shitty we did today, should we talk about some of the news?
There is a lot of interesting things going on in the market. So
Oh
I
yeah.
actually think, yeah, I think that would be a fun
Well,
switch.
should we do some quick stories first and then get into the meat of it, which is going to assume is going to be PPI and retail sales?
Yeah, whatever makes you happy makes me happy.
All right. Well, I guess this one kind of leads into PPI, but there's let's see, who is this? The analyst at Fundstrat, Tom Lee, is arguing that the markets are going to gain more than 20% in 2023 because he sees inflation as being transitory and thinks that the Fed will be making the long-awaited pivot to a dovish stance.
I mean, I do think crack cocaine is a hell of a drug. So it's
I
good to see. Good
Yeah,
to see.
I couldn't resist pulling this one up just because that fucking transitory word again. Like, at what
Yeah,
point
and
is okay? Anything is transitory, like Dad used to say. Like the longer, if you go a long enough time frame,
right,
but
exactly.
two
So I,
years,
I think there's, dude, not just that, but I mean the this the talk about the Fed pivot drives me fucking crazy. It is interesting though, because the
hmm
bond market, like we talked about last time, it is showing some hints of where we might see things go, which that in and of itself is fairly informative. But
yeah,
the issue I have is just the sensationalism of news. The only reason I can guarantee you, if you sat down with that person to have a logical conversation about it, I can nearly guarantee you that's not their actual position. It is the
mm,
position that they're crafting for the sake of being heard as it's working, because we're fucking talking about it. But that
yep,
is exactly how financial news media works, man. Like, that's why all these people, Michael Saylor, and the Bitcoin maximalist thread that he's on, he's built an army of supporters doing that. And it's unfortunate because there's a lot of non-discerning information consumers, and they'll kind of go along for that ride. But yeah, dude, to me it's just a fucking sensational article title.
Well, here's the thing, too. I mean, if you throw enough shit at the wall, eventually you're going to be right one of these times, and nobody remembers all the times you were crying and it didn't
Dude,
come to pass. You just go and pull up the old tweets and say, look, I was right. I was right."
so there's a guy that I'm actually interviewing this coming Friday who's essentially like hallmarked by that. I
hmm
don't dislike him. I think he's a good dude, and I think he's been around the market for a long time, and he's a lot of interesting perspectives to share. That being said, he's been making, at least since I started the YouTube channel and interviewing him, I catch up with him like once a quarter,
hmm
and it's essentially been the same hypothesis, and it just moves out 6 months each time.
Oh, really?
So I'm actually really looking forward to discuss with him a little bit more. I wouldn't say like going soft, but I've mostly been in receive mode because the
Yeah.
dude's been on Wall Street for like 50 years. So I'm not going to disrespect somebody like that out of the gate. I'm mostly going to look to consume as much as I can and see what threads we can pull on. But at this point, I am at a point where I feel confident enough to have like a direct conversation and say, hey, you and I personally have discussed 4 times now,
Right.
and essentially this is what I'm seeing. So can you walk me through what's going on here? Or maybe you just think maybe it's that, right? Maybe you're just continuing the same hypothesis until it comes to fruition. If that's is that what's going on? Like, I actually really want to understand, but it's one of those, it's again, it's a very sensationalized message. It's like very, very parabolic in its nature. And again, I get why, because
Yeah.
if you look on my YouTube channel, like the two most fucking viewed videos are that. And
hmm
it's because of that.
Well, you haven't got your McLaren yet.
That's it. I think I just need to get my OnlyFans started with the McLaren on it, and then
to
I'll
put some
probably
high
get
heels
banned in
on
like
and pump the pedals.
I'll probably get banned in like 14 seconds for destroying people's eyesight. But
everybody likes something. You'd be surprised. There's a market for everybody.
Not everybody, but
but
but I'm gonna have a blast.
Happy New Year from our friends over at Manscaped. The ball has officially dropped, and so have mine now that the bird's nest has been cleared out. Whether you had a New Year's kiss or not, the leaders in below-the-waist grooming have you covered for your much-needed resolution of bringing sexy back. Join the 7 million men worldwide who trust Manscaped with our exclusive offer. Go to manscaped.com and use code 2BULLS for 20% off plus free shipping. Now, as always, that's the number 2. Here's a toast to the new year and to a new you with no unruly pubes. Now that I've done the hard work of clearing out the overgrowth, this year is all about maintaining. Nobody wants to play golf on an overgrown putting surface. Maintaining a manicured playing surface is easier than ever with the global leaders in below-the-waist grooming. This year, take your package to the next level with their Performance Package 4.0 and other premium wet goods. And that's not what you're thinking. Inside the Performance Package 4.0, you'll find the Signature Lawnmower. The advanced skin-safe technology reduces nicks and cuts on your delicate parts. It also comes equipped with a 4000K LED spotlight that'll shine a light to the Promised Land 23 looks to be. And your grooming routine isn't complete without applying Crop Preserver and Crop Reviver before showing off your 23 self. Just make sure that you have consent. These unique formulas take care of the smelliest parts of your body and are a big boost of confidence to the new year. To complete the set, Manscaped also threw in their Shed Travel Bag and anti-chafing boxer briefs as free gifts to keep all your goodies stored comfortably. And believe me, those boxers are comfortable. If you really want to make 23 the year to remember, make sure you try out Manscaped's wet goods as well. This includes their ultra premium body wash, 2-in-1 shampoo, and body deodorant. These products are the absolute perfect follow-up after your New Year's gym sessions. Cheers to new balls in 2023. Hear, hear. So remember, guys, get 20% off and free shipping with promo code 2BULLS at manscaped.com. That's 20% off with free shipping at manscaped.com and use code 2BULLS. Time to feel sexy and free in 23 with Manscaped.
Last story I got on here that I wanted to just touch on before we get to the other stuff was, and I thought it was going to be a shorter one, but it sounds like you think this might be a little more newsworthy than I initially thought. But Microsoft's saying they're going to lay off an additional 10,000 employees this year, which is about another 5% of their workforce. And this is following I think it was 1,000 that they cut in October. Yep.
Mm-hmm.
So let's see. They employ about 221,000 workers worldwide, and there's been multiple other tech firms that have been slashing jobs too. Amazon being one of them. Let's see. Twitter, Lyft, Stripe, Salesforce, Coinbase, Robinhood. So yeah, the Fed's war on jobs seems to be working, at least in the tech field.
Yeah. So I think this is actually Amazon is going through another round of job cuts, and I think they're dropping like 18,000. So
yes,
that's going to be the largest reduction in their 28-year history. The
It's
reason
tough
why
for-
I think
It's tough for Amazon because they've already been through pretty much everybody they can employ. They've already employed them at one point in time. Like we talked about that a year ago.
Yeah. I think it's just, this is a pervasive thread. And I think it's important because, when people talk about my approach to the markets and how I perceive the markets, like this is one of the things that matters to me because you are seeing a major theme playing out real time where we look at the tech sector and in general, there's like 60,000 employees that have been laid off in the last year. That's huge.
Right.
Like that is a noteworthy figure. As you look across the companies that you listed, we look at things even into like crypto and Coinbase. I think there's like 2,500 or 3,000 folks cut from there, but that's a large percentage of the workforce in general. So I look at all of these big movements and it's pretty informative to me, at least again, in terms of a broad theme where I have a hard time seeing where tech is the hero of this story, where right now they are scrambling. I don't think tech is going under. Let me be abundantly clear. I don't think that they're,
No.
dying. I think that they've just been fat and happy for a really long time and they're getting pared down. They're taking a pretty significant haircut. But to me, that also means if you're looking for the next sector leader for the next bull market, at least as of this point right now, it's hard for me to see the case in something like tech being that when they're just right now reorganizing for survival.
Right. And I mean, how much of this was poor planning or based on the stupid, in my opinion, assumption that the good times of the pandemic were going to continue ad
Well,
infinitum?
I think I wouldn't confuse those two personally, at least. Like my perspective is I would wager that during the hiring craze in 2020, I don't think any of those companies were thinking, oh, we're going to keep all these people. Like, I just
You
don't
think
think
that
that.
they
I think that they met a pending demand to make money. We have to remember,
mm-hmm.
they're not worried about the turmoil they cause in turnover in people's lives, right? Like
Right.
they don't fucking care. And that's I enjoy capitalism. I think it's a good thing, but I think it's always important to remember the mandate that they're following, which is make fucking money. So during COVID, there was an unprecedented demand for most of them.
Mm-hmm.
Why on earth would they not meet that demand, extract all of the value for as they can for as long as they can? And then now we see the unwind of that. They're saying, okay, because obviously they're not allowing themselves to go under to try to take care of everybody. They're saying, yep,
No.
thank you for hanging out for a bit. If you're good, we'll probably give you a severance and we'll catch you later, fam.
Yeah, pretty much. So what do you look for in that sector to think like, okay, they're getting their footing. Now's the time to start, investing long term. Just out of
We
curiosity.
Yeah, we're coming into a just a beautiful point in time where we're going to start getting some key data points. And like, I think this was one of the topics you had. So I'll just, with the gleeful heart, steal it from you. Netflix has earnings
Yes.
coming up, and
Mm-hmm.
we're going to start coming into tech in the next couple of weeks. So this is where you're going to see that they're going to talk about all of it. They're going to talk about the stabilization. They're going to talk about their forecasts. They're going to talk about their staffing. So it's going to be a big deal. In those conversations, we will get the roadmap, in my opinion.
Mm-hmm.
But I mean, it's really interesting with Netflix starting. I think they have what, like 450 job cuts over 2 rounds of layoffs or something like that. In May, it was 150 jobs, and then in June, 300. So they
Okay.
still, that's not huge. They're
No.
doing well compared to a lot of these other places comparatively. So they're the first ones to go. So I would look at the way they talk about staffing from that lens, that they're not getting killed right now. So whatever you see Netflix talking about, there's a good chance you can essentially amplify that same thread for the following tech companies that are showing premature weakness. But for me, I would be fading. So as soon as we get any decent rallies in the queues, especially if we get them up near 290, 300, like I would fade them happily.
Mm-hmm.
And I actually had a short on in the queues today because of the news as it started to roll out leading into earnings. I just think they're going to be under a microscope. And I think just about anything they say, even if they beat earnings, I don't think that they're going to play out really well just because of the interim shock that all the layoffs are going to cause.
Well, Netflix is an interesting one for me, less so because of what they say about their staffing, but more because I want to see the effects of the crackdown they've had on password sharing.
Yeah, because
I want to know what their subscribers are they gaining or losing subscribers, and how has that impacted their bottom line?
I see. Yeah, and I mean, obviously, we'll get all those
Mm-hmm.
details.
Oh yeah,
But yeah, I think, I mean, at least for me, I haven't heard too many people actually talking about it. So I don't
I've
know
heard
if
a
that's
few, and
telling
people
or
are
not.
calling for it to be. They're calling for earnings beat. They're thinking that it's going to be a lot better than they're getting ready to than everyone's expecting. That's
Got
been
it.
the buzz that I've been seeing. But I look at this stock and I see it sitting at a really strong resistance level. This is one of those ones where I want to see it break above that and retest it before I try to take advantage. I'd be more tempted to try to short it just where it's at right now.
Yeah, I mean, the way that I would view any sort of long-term investments in most of these is Netflix is probably one of the few tech companies that still has at least a reasonable looking chart, but it's still not good.
No, no.
If you look at anything outside of 6 months, it's still negative slope in general. the moving averages are just starting to get under themselves a little bit more effectively, but still largely not exactly where we want it to be.
No, definitely. All right, let's move on before we run out of time completely, and let's talk about PPI and retail sales. What do you got for us?
So I think when we look at those in a broad brushstroke, we actually saw, like we were talking about before, we saw retail sales came in pretty soft. So for the month over month, it was expected to come in at negative 0.5%. It came in at negative 1.1. So a pretty big decline in
Mhm.
retail sales. And then when we look at PPI was expected to be 6.8%, came in at 6.2.
PP.
Yeah.
Sorry.
And those are actually really interesting to me because, retail sales declining, I think we saw that coming, but
Mhm.
still like pretty bad. And then PPI coming in as low as it was, which is it's interesting because it's a good thing but a bad thing. We were talking about this before when it came to unemployment. It's another similar story. Like you don't want it to contract too fast because then it
Mm.
starts to tell you you've gone too far.
Right, right.
And I think that that's one of the things people are starting to glean from it.
Oh, okay, that's interesting. So how much is too fast?
Hard to say, especially because we're in such an unprecedented time. But again, if you look at the previous year over year PPI, it was 7.4%.
Mhm.
It was expected to contract 0.6%, and it literally contracted over 1.2%.
Right.
So it about doubled. So that is definitely a pretty steep acceleration outside of the forecast. So even if the forecast was more aggressive and it was closer to the forecast, fine. But the fact that it was, 0.6% below the forecast, which was already pretty aggressive, again, 0.6 below the previous year over year PPI, like those were all pretty significant figures. So I don't think that there's like a formula that will say too fast, too slow, but I think it being that far off of forecasts is kind of telling in and of itself.
Yeah. And the risk there is that the Fed has pushed it too far, and or basically the chances of that soft landing are evaporating in that case.
Yeah, that's more or less the story because the conversation of a soft landing is so tricky, especially because again we have no landing to model off of in this scenario. But
Right.
using commensurate, at least as commensurate as we can find, instances where we're reacting like this and we start to see PPI crushing as it is not good. One of the things that continues to confound me genuinely is I am really surprised to see the stock market rallying as much as it is because what is it? It's up. Let me double check real quick what it is for the year. S&P 500 is up 1.9% year to date. The Russell is up 4.5% year to date. The Qs are up 3.4% year to date. That just surprises me, man.
Well,
I sorry, go
when
ahead.
we talked about this when the inflation was finally starting to recede, and I think we pulled some stats, and I don't remember what the exact figures were, but the markets have had outsized returns, like immediately following like the highest inflation reading historically.
Yes. Yep. And I definitely believe that there's a little bit of seasonality and efficacy behind that.
Hmm.
The part I'm struggling with is like we still have high inflation. It's not gone. Like
Right.
we're still in it. And worse than that, seeing the way that the market is reacting still, I would argue pretty emotionally, or I don't know, maybe that's not the right way to frame it. Just with still increased volatility, that's without a doubt.
Yeah, I would agree with that.
I I just have a hard time understanding the optimism because I'm not optimistic, at least myself, into the second half of 2023. But I also acknowledge the fact that I am not the fucking collective brain that is the stock market. Maybe they have it right and I'm just missing something.
Well, you're also on a podcast called Two Bulls in a China Shop, so
So
we gotta flip your thinking there, buddy.
yeah, I was gonna say I just got to be permable.
Yes, or just expand your time frame.
Mm-hmm.
There you go.
Yeah, tried and true.
Yeah. Oh shit. All right. Well, anything else you want to touch on before we wrap up here?
No.
That's a good conversation, man.
Mhm.
Why am I always surprised? All
Well,
right. Well,
because I stay true to my Marinus roots and spend most of my time bumbling around my life like a fucking idiot.
I thought did you say Mariner roots?
Marinus Marines.
Ah, that's same. Potato, potato.
Yeah.
All right, everybody. Thanks for sticking around to the end here. Hope you had a good time. Hope you learned something. Hopefully, you tell your friends that want to hear about people struggling that they can tune into us, because we'll definitely talk about that too.
Well, I'm not struggling, but
It's not all just McLarens though. Everybody has bad days. Everyone has losses. We don't sweep those under the rug around here.
facts.
All right, say goodbye, Eric. We gotta go.
Goodbye, Eric.
Bye.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.